Hi there, everyone. And today we're going to be looking at volatility. It's the 29th of March, 2021. The American markets haven't opened yet, but I thought we'd look at volatility. There was some news about how Goldman Sachs had dumped more than $10 billion worth of a hedge fund's shares onto the market, causing a minor heart attack, I guess, with lots of other people. So volatility is rife nowadays, not only because of what Goldman Sachs did, but also the general climate about the inverse yield curve, which we've covered before, and also other issues as well. So without further ado, my name's 𝙋𝙧𝙤𝙤𝙤𝙤. You can call me Ifty. I set up Extreme Returns on eToro about 5 months ago. We're doing okay, both in January and February. In fact, in March as well. The portfolio was up by more than 15%, only to come down significantly during the end of the month. However, it is what it is. 45 copiers, thank you to each and every one of them. I should be making champion very soon. I've got the 50,000. Whether it averages out for the month, I don't know. But it's been like that for a while. My background, I'm a chartered management accountant. I work for Unilever and Mars Confectionery. Check out 𝙋𝙧𝙤𝙤𝙤, my story on YouTube, and do also subscribe to my YouTube channel. It's called Extreme Returns. I've done headhunting, recruitment consultancy, and set up my own estate agency, and done peer-to-peer car hire as well on Etoro and Getaround. Okay, so over to Ben Carlson on A Wealth of Common Sense. Now, this is a really interesting article, so I'm going to go through the entire article because it's worth doing. His title, and it was just published yesterday, is Owning the Best Stocks is Hard. So once you've identified the best stock, holding onto it for the long term is like putting fire in your hand. It's really hard to hold on to. So let's go through it. Amazon, he says, is the poster child for the old trope of if you would put $10,000 into a wildly successful stock at such and such a price, you would have made an insane amount of money. And we hear those kind of comparisons all the time, or those analogies rather. Venture capitalist Bill Gurley was a master's in business with Barry last week and talked about why it's so hard to pull off a long-term holding in a company like Amazon. And Gurley said, the power of compounding for some of these platforms is so huge that, you know, if you invest in an Amazon or whatever, the hardest thing to possibly do is just to close your eyes and forget it. But that's probably the best advice. The only analysis that's going to cause you to do is to sell the stock. You know, you're not going to run analysis for the 14th time and go, I should keep holding like that. And that is so hard, so hard to implement. Easy to say, very hard to implement. Basically, you can't overthink these things, but overthinking is what we humans do. The reason it's easy to overthink these things is because a ride can be so rocky. And look at this. This is the Amazon chart. Here, minus 94.4%. The near 95% crash, just 2001, following the tech bust, is the one that most people point to. The stock was underwater, I mean, it was in a loss from 1999 to 2009. But there was a 54% crash from 2005, 2006, a 58% dive in 2008, and 5 separate losses of 25% or worse since 2009. The problem with such regular bone-crushing losses is that you never know if your stock is going to come back or not. Since 1980, more than 40% of all companies in the US stock market have experienced a decline of 70% or worse without recovering. And those enormous declines aren't just for the companies that don't come back from the dead. Microsoft is another good example. The stock fell nearly 75% following the dot-com debacle, and it took 17 years for the price to make it back to the levels of late 1999. Just think about that, 17 years. I've got a 17-year-old. Microsoft also fell 56% in the 2008 crash and has experienced 6 double-digit corrections since 2009, including 3 drawdowns of 20% or worse. Monster Beverage is one of the best performing stocks of the past few decades no one's heard of. The stock is up 125,000% since the turn of the century. Apparently, people really like energy drinks. But look at the drawdowns, he says, the stock has experienced to earn those ridiculous returns. Here you can see 92%, and here again. It's fallen 60% or more 4 times, and 2 of those times it was down 90%. Tesla is another stock that has seen unbelievable growth in its share price while also exhibiting painful losses on its journey to become one of the best performing stocks of the past 10 years or so. Tesla was up by more than 730% in 2020 alone, but also had its worst drawdown since becoming a public company, falling more than 60% during the Corona crash. I counted 10 bear markets for the stock since its IPO, and 3 of those bears were crashes of 40% or worse. Or how about Netflix? In 2012, you could have bought the greatest streaming company of all time for an 82% discount. And there have been 4 losses in excess of 25% since it became the streaming juggernaut we know it as today. When you look back at the returns of the stocks like this, it's easy to think to yourself, I knew I should have owned that stock. But drawdowns are always far easier to deal with in the past than in the present. You know, the length and duration of past losses while stocks are down. In the present, you never know how bad the losses will get, or if and when they come back from those losses. Think about a stock like Peloton. This was 8 billion market cap growing company going into 2020. By early January 2021, it was close to 50 billion. Then out of nowhere, many of the pandemic darlings got shellacked. Peloton fell nearly 40% and is now closer to 30 billion. I could see Peloton growing into the biggest fitness brand in the world. I personally love the experience. Or they could be a niche fad company that never reaches the heights of other growth companies. I wouldn't be surprised by either outcome. This is what makes picking these winners so difficult. It's a constant tug of war between expectations and possibilities. I could come up with a plausible scenario that many of the growth stocks that went vertical during the pandemic were massively overpriced. They can't possibly live up to the nosebleed valuations they were given. I could also come up with a plausible scenario that a handful of these stocks are going to be much higher someday, and every time they fall 20, 30, 40, 50% or more, it presents an unbelievable buying opportunity. I'm no good at predicting these things, but if I had to guess, the 2 companies that have the best chance of becoming as big as Amazon or Microsoft, release hitting market caps a level below these behemoths, would be Shopify and Airbnb. Each company is currently sporting a market cap in the low 100 billions. Then he goes on about why he thinks that will be the case. Shopify is one of my biggest holdings, by the way. That's a really interesting article, and I'm going to save it. I thought I'd record a quick video about it because it should be read and reread. I keep on giving the advice to my copiers. Let's see if I've got it here. Best advice is to not look at your, here we go. So here we go. My advice is quite simply not to look at your portfolio, put the money in, forget about it, and come back in a year's time. You can make that 5 years or 10 years or 20 years. The stocks I've picked, I'm sure, will do well over time. Okay, that's me. Very quick plug for my wife. Her name's Diba. Now, Chinese stocks have been really hit hard. And I think this is a great opportunity to pick them up on the cheap. Look, some of them have gone down. Baidu went down by 26%, and that's only in the last month. I've got it on my watch list for my own account. If you look, 26%. So that's a good chance now, I think, because she's got an all Asian portfolio, I think the only one on the Etoro. And if you look at my son, Dr. Mohammeduddin, he's got the Green Dream, which is looking at companies that make the world a better place. He's on 4% for the month, 7% for the year so far. That's okay. He's doing better than me. So if you wouldn't mind, copy us as well. Thank you very much. It's been a pleasure. Iftiuddin, take care and stay safe.